Good afternoon, everyone, and happy Friday. With the first full week of trading underway in 2021, let's do a bit of a recap in terms of where we are currently at. Now, so far this week, we saw a good amount of volatility in the markets. Specifically, let's take a look at 6 different charts. So we'll look at the S&P 500, the Dow, the Nasdaq, the Russell, and then we'll also take a look at gold and the bonds here to try and gather what these charts are currently telling us. In some of these markets, we've currently had key extensions. We have squeezes that are either about to fire or look like they're shaping up. So we'll do a touch up on all 6 of these markets to really gauge where we're at in the first week of 2021. Now, in case you haven't already seen it, I would recommend watching the video that we released earlier this previous week. That was around inflation risk, where the whole theme here was one in every $5 in circulation right now was printed after March of 2020. That's insane if you really take a step back and think about it. And that comes with a very real inflation risk, which we talk about how you can potentially hedge, what are some sectors that are likely to outperform, and what are some sectors that are likely to underperform. To give you a quick overview or recap here in case you don't want to watch the entire video, we had the strong sector being XLF, so the banking sector. We had the weak sectors being bond proxies, so things like utilities, real estate stocks, so things like XLU we had, and then XLRE. So those were sort of the options there, along with some of the growth stocks as a result of inflation kicking in, and then the future earnings being discounted at a higher discount rate. And so that was in the group of stocks or sectors likely to underperform. And then we talked about a third option here, which was gold, and that was, in my opinion, a very nice middle ground in terms of a potential hedge. And gold today, we saw quite a bit of a sell-off, and so we'll take a look there to see, was that sell-off an opportunity to try and add to gold, or is the sell-off more of a reason to try and be cautious and maybe this overall idea doesn't really pan out? So let's take a look at all of these things in today's video. Hope it's a good one. Let's start with the S&P 500 first here. So in the S&P 500, if we use the Feb to March decline, which is something we'll use quite often in this video, then you should notice that we've currently hit that 1272 extension. This is the first place where we expect price to start to exhaust, but so far it doesn't look like we're really exhausting. Looks like we're breaking above it. To me, still the more likely scenario here, instead of starting to make a move towards that 1618, is at least a bit of a pause and chopping around sideways at 371.94. That to me seems to be the more likely scenario where we have 1, 2, 3, and 4 overbought signals with the edge signal confirmation. We also have a key extension that's been hit. You'll notice in markets like the Dow and the Nasdaq, we have similar setups as well, where the Nasdaq here, for example, we've already hit the 200% extension, which usually to me calls for a sign to at least take a breather, pause before again continuing this rally. So that's where I think the S&P 500 here, while we have broken above that 1272 extension, I expect that to be more of a magnet and we pull back to it and really chop around sideways. Now, one other thing, if we try and load in our triple squeeze indicator here, what you should notice once we have that plotting is we currently have a squeeze forming, which so far looks like it's about to fire bullishly. Now that squeeze very well may chop around sideways. And what I think, to me, at least the scenario that I'm looking for, is for this momentum right here to at least start to decline. So we see something like a dark blue histogram bar, maybe even go negative for a little bit, chop around before ultimately that squeeze fires long. So that's where I think there should be a bit more of a breathing room. Now, of course, so far the way the markets are currently going, it wouldn't even be surprising if you just saw a straight grind move up higher to 413.75. So be aware of that outcome as well. But in terms of probabilities in the more likely scenario, I say 371.94 acts like a magnet before we see this move to the 1618 extension. Now, if we switch over to the Dow here, the Dow very similar as well, right? So the Dow off of our larger swing high to swing low, we have yet to hit the 1272 extension. We did break beyond what would be considered that 100% extension or that previous resistance. And now if you take the most recent swing high to swing low, we're currently hitting that 1618 extension right here at I believe this is what, 311.49. And so far, at least as of today's activity here, you'll notice that price action failed there as well. And very similar to the S&P 500, I would be expecting to see a bit of chop around sideways here, maybe even ping-ponging between this 1618 and 1272 extension before ultimately breaking above that 1618 and then going for what would be that cluster of the 1272 and the 200% of this right between that 323 and 326 zone. So this to me is the overall longer term target, but I do imagine that we'll have a bit of a breather before we get there. So that's the Dow there. Very similar. You'll notice the squeeze as well. So far, it looks like that histogram is really starting to take off, but I think it would just take 1 or 2 down days to start to see this histogram again go back to the dark blue. That to me, again, more likely scenario. Who knows what actually happens next week? Now, if we switch over to a chart of the Nasdaq here, so the Qs swing high to swing low, the Nasdaq is a bit different where we've hit not only that 200% extension, but even if you take the more recent swing high to swing low, we also hit that 1272 and exceeded beyond it today. So the Nasdaq very clearly the strongest market. That 1618 for the next extension here, especially since this 200 has even been hit, would be 330.32. But with the S&P 500 just tagging the 1272, with the Dow not even hitting the 1272, to me those are the markets that I would be looking at more for in terms of a potential bullish move compared to trying to participate in the Nasdaq. That's just my personal preference. And then finally, let's skip over to the Russell futures here, where the Russell, again, we've hit the 1272. So let's take a quick pause here and summarize so far the four major indices. In the S&P 500 and the Russell 2000, we've hit the 1272 and exceeded it. In the Dow, we have yet to hit the 1272. And in the Nasdaq, we've hit the 200% extension and even exceeded beyond that. So in terms of where I think if you wanted to try and classify markets as being least extended, that would be the Dow to me. Most extended, quite obviously, the Nasdaq. Now let's switch gears and take a look at the charts of gold. If you haven't already, again, that inflation risk video, we discussed this idea of previous Fibonacci support at 171.20. We then saw an edge signal confirm the move away from that support. We also saw the market pulse go green. And today we had really, for all intents and purposes, a pullback to that market pulse after failing at that 50% retracement. So from a technical standpoint here, today was the opportunity to try and add to gold or a way to enter on a pullback. However, taking a look at the actual day's activity here, you'll see today was a bit of a decent pullback, right? We had even a bearish edge signal arrow. We came awfully close to that previous Fibonacci support at 171.20. And I think a lot of you may have a reason here to try and at least wait and watch and see what happens in gold. Do we see a move more similar to something like, say, TLT here, where TLT really just fell off of a cliff instead of holding that zone that we would have expected to hold as some sort of support? But one other thing that I'll point out in TLT is that squeeze has also officially fired here. We're in the second day of it firing, where from the standpoint, if we say tag something like 148.61, before then starting to turn back up higher, with TLT turning back up higher, that also supports the idea that we expect to see a bit of a pullback or at least a breather in the S&P 500, the Dow, the Nasdaq, and the Russell, and you would start to see price action here at least tag back up to the market pulse line. Now coming back here to gold, today was my opportunity to add to this position. Of course, this is a bit higher risk in terms of the pullback that you saw today, as opposed to waiting for an edge signal confirmation here off of a bullish market pulse. I think that would be a more conservative way to try and play this for those of you that are looking to wait and not jump the gun here. And for those wondering why this bearish edge signal arrow today doesn't necessarily deviate away from the plan of an overall bullish idea, that's mostly because we're seeing a bearish arrow, so this is overbought confirmation in an overall uptrend. So when we have something like, say, a green market pulse, we're looking for only bullish or green arrows. And if we do see a bearish arrow, that's usually a sign that we get a pullback to the market pulse line, which today we already got that pullback. We had a bit of a sell-off here, and then we recovered just a little bit, not as much as I would have liked to see, but so far, gold to me is still a valid trade idea as a potential inflation hedge. So that there, for those of you that are interested, you have an opportunity to enter at a better price than when we were discussing gold just a few days ago. All right, so all in all, this week has been fairly volatile. It's been a volatile start to 2021. That, of course, has led to trade opportunities, but it's also led to some interesting activity. For example, to start off the week, we had the S&P 500 and the Dow being the ones that broke outside of their doomsday conservative models, all of which to say those were the ones experiencing the most volatility. And we saw that volatility regime start to switch as the week went by, where now that volatility transferred out of the Dow into the Nasdaq. And then today we saw that volatility enter full-fledged back really across all four indices. Be curious to see what happens in the second week of trading, but so far, at least gold to me looks like the place where you have a decent pullback opportunity to try and participate. The four indices look a bit extended to me, where now that we've hit key extensions, I expect to see a bit of a pause. Of course, Thursday and Friday have been activities in which we just see continuous bullish action. So let's see what next week shapes out like. Hope you all have a wonderful weekend, at least taking a break away from the charts or getting a chance to just rest your minds and prepare yourselves for next week. Take care, everyone, and we'll see you in the next update.